Tax and wealth expert Tom Wheelwright is a CPA, CEO of Wealthability, Rich Dad Advisor, entrepreneur, international speaker, and the best-selling author of Tax-Free Wealth: How to Build Massive Wealth by Permanently Reducing Your Taxes. He recently released his newest book titled The Win-Win Wealth Strategy: 7 Investments the Government Will Pay You to Make. Wheelwright is the CPA for Robert Kiyosaki of Rich Dad Poor Dad fame and has spoken on stage on every continent to over 100,000 entrepreneurs, small business owners, and investors. He's also the host of 2 popular podcasts, The Wealthability Show with Tom Wheelwright and The Wealthability for CPAs show. His goal is to help people achieve their financial dreams faster by permanently and legally reducing their taxes. Tom, welcome to the next level.
It's so good to be with you guys. Love being here.
I've been really looking forward to this interview, Tom. So just for the audience and for our listeners, I was a huge fan. I've been coaching for Strategic Coach for a number of years, and I can't say that I've ever been starstruck until this unassuming man was in one of my workshops, and the name was Tom Wheelwright, and I was like, man, that name's really, really familiar. And then I looked and I realized that I had given probably somewhere in the neighborhood of 30 to 40 books away by this author. And Tom, I'm just really excited because I know that the way that you taught, the way that you spoke and communicated in that book was a game changer for me and a number of people. And then I just also want to say, I love how you show up in every community. You're such a humble learner and giver. So I really know today's going to be rich. So thank you.
Well, I love it. And I love to learn, and I love the education that you guys are doing. So really appreciate, your efforts as well.
My pleasure.
Yeah, absolutely. So Tom, let's just start at the top. I mean, I'm super fascinated. Our audience, as you know, is entrepreneurs. It's folks who own small businesses. Yeah, I'm sure, this is your bread and butter audience, but I'm sure you sort of feel like maybe every day is Groundhog Day, because I'm sure you're running into entrepreneurs who are always making the same basic mistakes in terms of not planning for the future, or in just how disorganized or unthoughtful they are as it relates to their taxes. It's something that seems to, for a lot of folks I know, take a backseat to the day-to-day of the business. And then there's a lot of reliance on, that 1 or 2 months a year you're talking to your CPA and just hoping for the best possible outcome. So what are some of the basics that you educate your entrepreneurial audience on?
Yeah, I think the most important thing is to really understand how the tax law works and how easy it is to reduce your taxes. This is your number one biggest expense, outside of maybe if you have inventory in a retail store, but it is otherwise your number one biggest cost. And I always say the fastest way to put money in your pocket is to reduce your taxes. Once you understand that the tax law is really a series of incentives, and that we're partners with the government, that really all we have to do to reduce our taxes is do what the government wants us to do. We have, instead of fighting the government, look at this is where the 7 investments come from. Look at what are those types of producing assets. The government says, we'd really like you to do this. And then if you're willing to put your money into those assets, like business, like food, like housing, like energy, if you're willing to do that, then you just have to understand the basic rules. And so the basic rules are in tax-free wealth, the concepts in which investments are in the win-win wealth strategy. So it really is a function of just get some basic education first, and then stop looking backwards, start looking forwards. And not only do you want to look at what do I need to do right now, but you want to look at what I need to do in the future. One other thing I just add, on this basic subject is how much tax you pay depends largely on how you earn your money, and then second of all, what you do with your money. So you really look at it's that simple. You look at those 2 things, and then again, you have the right tax advisors who have a system for doing this. That's what our Wealthability Networks is all about, having those right tax advisors with the right system. Once you do that, then taxes become, instead of becoming a pain, they actually become a pleasure.
Well, that's a big promise. I don't think I've heard anyone ever promise that that taxes can become a pleasure, but I love it. And I know that you have the book, and you alluded to some of the areas where those opportunities to pursue what the government is incentivizing are. I also know that we have, and this will be familiar to you as well with entrepreneurs in your audience, we have a lot of quick starts and a lot of low fact finders. And I know that that's why your network of CPAs is so valuable. So what are some of the questions or frameworks? How should entrepreneurs think about engaging their CPA? What are the questions and what should they expect from their CPA that say, oh yeah, this is somebody who gets it?
Well, I think first of all is to ask better questions. Instead of asking, is something deductible, ask, how do I make it deductible? As a fellow entrepreneur, I'm going to tell you, I've never wanted somebody to tell me what I can't do, ever, not even once. What I want them to tell me is, how do I do what I want to do? And so if I want to reduce my taxes, how do I do it? If I want to deduct my trip to Australia, how do I deduct that trip to Australia? If I want to deduct my Lamborghini, how do I deduct my Lamborghini? And what's really what you're looking for from an advisor is a different way to answer the question. I had a client just the other day was asking me, okay, how do I take money out of my company and pay the least amount of tax on it because I need it for, a financial investment. And they actually had the choice of they could make this financial investment in one lump sum, or they could make it over a period of time. And so we talked about it for a little bit, and I said, what if we just bought a different asset and had the asset fund it? And when you start looking at things completely differently and recognize that there's probably 50,000 answers to any question, we've only really identified 2 or 3 of them. And you've got an advisor, whether it's your CPA, your financial advisor, whoever it is, who's willing to look at completely different ways, to analyze a topic. You're really looking for analysis. To me, what I always look for in my advisors is, can they analyze something, and are they willing to, go down to the basic principles, strip away all the fluff, and get to the meat of it and say, okay, now what do I really want to accomplish here? Because like with my client, it wasn't he wanted to just pay the least amount of tax. It's that he wanted to accomplish this bigger purpose, which was funding this investment. And the best way to do that turned out to not be the way he thought he wanted to do it. But I offered another way of looking at it. And he goes, that's it. That's everything. I mean, like the conversation, another quick start, right? Conversation's over. We're done. This is exactly it. Just let's figure this out. Let's do it. Let's get it done. And I'm a 9 quick start myself, so I'm a very low fact finder. I'm not really good with details. What you want is that's why you want to. The other thing I look for is an advisor who can simplify it, who can really put it in your terms, because the challenge with a lot of CPAs is they tend to be high fact finders. High follow throughs, that is their nature. And they want to complexify the daylights out of something. Taxes are by their nature complex. What I always want to be looking for is somebody who can actually explain it to a 6-year-old. Einstein said any 6-year-old can explain something to a genius, but it takes a genius to explain something to a 6-year-old. And what we're looking for is that genius advisor who can actually explain it in very simple, fun, easy, understandable terms.
And I think that's the perfect segue, because I think you've sort of backed into what I expect is, the Wealthability CPA network. Can you just tell us a little bit more about the network, your business, and how it interacts with, with entrepreneurs nationwide?
Yeah, absolutely. So we used to have a pretty sizable CPA firm. The challenge with a single firm is they can only serve a certain bandwidth of clients. And what we had people coming from all the way from the beginning, I want to start investing, or what we might call a wantrepreneur, all the way up to, people making $100 million, worth $100 million, and making millions of dollars a year. Well, you can't you really can't serve that broad of a bandwidth in a single firm. So what we did was 5 years ago is we started a network of firms, and the network of firms goes all the way from that firm that just handles like contractors or gig workers, people like that. People who are just starting out, they've never invested outside of the mutual fund before. How do I do that? You know, what tax things do I need to look for? What kind of legal things do I need to look for? So, you know, can we pass them on to an attorney that can explain the legal side? And then all the way up to the very, very sophisticated serial entrepreneur investor, the type of people we meet at the highest, that Steve and I meet in the highest level, strategic coach and other great mastermind groups. You've got to be able to handle all of those. So that's what we have. We have basically 60 plus CPA firms around the country, but they are all different levels. They're all different specialties. They're all different. So instead of trying to have a one size fits all, we can really look at who's the right entrepreneur to serve you.
When you're looking at these, like, what is the DNA? I mean, that within each of these that you're looking for. I mean, because clearly that partnering with the government is a different type of mindset. My CPA that got fired after I read your book, and I was just past the wantrepreneur stage when I read your book. We were still early stage, so I couldn't afford your services. But I remember, like, he said, "Congratulations! I got a big tax bill at the end of the year." He said, "Congratulations, you've made more money," and it was maybe the most infuriating thing I've ever received and like just heard. And it's not like I didn't want to pay my fair share of taxes, but it's like, man, where was the strategy? You saw we met like nothing, you know? So how do you pick people out that are going to fit within your network?
Well, first of all, we only pick CPAs who happen to be entrepreneurs who happen to be CPAs, excuse me. We start with, there's two primary requirements. The first is that you're an entrepreneur. You just have a specialty in tax. You're an entrepreneur, but your specialty is in tax. The second is that I like hanging out with you. And actually the second one is very important because you want to be around somebody, your tax advisor is, I think, the most important person in your financial life, because they're going to have the biggest impact on your financial well-being of any advisor. And so if that's the case, do you really want to hang out with somebody that you just go, wow, this guy is so boring, or this person is just, wow, I just don't want to be around them. So I think taxes should be fun, easy, and understandable. So I want to have advisors in our network that we'll look at it as, well, you know what, taxes can be fun. They can be easy. They can be understandable. We do a lot of training. We do a lot of training every single month. I mean, literally almost 2 or 3 times a month, we're training our network members, just because we do have a very different attitude towards the tax system. This is something, we're not looking for loopholes. We're not looking for aggressive. I don't think we're an aggressive group of CPAs. I think we just understand the law better. And so, once you start understanding the law, you go, wow, there are so many opportunities. And, that's why I wrote Tax-Free Wealth. I just wanted people to understand that it's fundamentally not that hard. Yes, the details are difficult. That's why you need a good advisor. But the fundamentals of it are just not that hard. To make something deductible, not that hard. You just, you follow the rules, and it's 4 simple rules, and you follow those 4 simple rules, and off you go.
Can you double down? Just one of the things, just to double down, because I've never heard anyone say that this is your most important, maybe one of your most important advisors in your business. Can you help maybe blow that out for the entrepreneur that's like, what? Like, because I think for a lot of times it's an afterthought.
Yeah, I actually learned this from my mother. My mother was an accountant. She was the controller for my dad's business. And she told us as kids, the 2 most important people in your financial life would be your insurance agent and your CPA. And, that was when literally I was 8 years old. I heard that from her. And And I took it to heart, and I'm going, well, I don't want to be an insurance agent. I'm going to be a CPA. So I thought that's pretty cool. But when you think about it, so the most trusted business advisor you're ever going to have is going to be your CPA. I mean, I don't think that's even questionable. You don't go to an attorney for financial advice, and you don't go to a financial advisor for business advice, right? You go to a CPA because you know that they're going to have your best interests at heart. At least they're going to try to, they want to. The challenge is a lot of them don't know how. And that's really our mission at Wealthability, is to, revolutionize this profession into taking a more proactive approach and more futuristic approach to our clients. But the reality is, I mean, if you have, tax rates for some people are upwards of 50%. And then you add on to that sales tax, property tax, excise taxes, all these other taxes, and you're going, taxes are a major, major, major portion of our life. And we can't get away from the fact that the government is entitled to tax us. What we can get away from is being a tax mule and just burying our heads in the sand and saying, well, I'm just going to pay my tax and move on. And I got to tell you, Stephen, so that comment that your CPA made, I cannot tell you, I'll bet I've heard that from 100 different people, that they said their CPA came to them and said, wow, this is, you pay more, you make more money, you're going to pay more tax. And I'm going, okay, so I give you all your listeners a rule. The more income you earn, the more tax you pay. The more wealth you build, the less tax you pay. So you're gonna have to think about that one. But the more income you earn, the more tax you pay. But the more wealth you build, the less tax you pay, because the law is actually structured to encourage you to build wealth. And if you put your money, if you consume your earnings or you save your earnings, you'll pay tax on your earnings. If you invest your earnings into productive assets and you have a good tax advisor, those two together, you don't have to pay tax on those earnings. That's the way the law is written. By the way, in the Win-Win Wealth Strategy, we actually looked at 15 different countries and found that they were remarkably similar. So this is not a US phenomenon. This is something that is every continent, countries all over the world, they look at taxes. The government looks at tax the same way, because remember also, while it's your biggest expense, it's also a politician's greatest power. It's the power of taxation. And the government's greatest power is the power of taxation of its people. And unfortunately, sometimes governments, I think, don't take that as seriously as they should, and don't feel the fiduciary responsibility that I would like them to feel. But at the same time, no politician has ever willingly given up power, or it's pretty rare, right? And so the chances of going to a flat tax, things like that, I think, great idea, not going to happen. So just remember, this is how it works. My job is to explain, and your advisor's job is to explain, this is how it works, and this is how we can make it work for you. We're not out there lobbying for change. We're here to explain, how do you make it work for you?
That's such a fascinating distinction, and it's the first time I've heard it put that way, where if you consume or save your earnings, you pay tax, and if you invest your earnings, you don't pay tax. Can you just go deeper on this notion between the more income you earn, the more tax you pay, the more wealth you build, the less tax you pay? I mean, that's just such a powerful unlock, and I would love to hear more on that.
I'm going to put it in really simple, since a lot of our listeners here are entrepreneurs. Okay, if you take your money from your business, you earn income in your business, and you reinvest it into your business. And the reason you're going to reinvest, so think about this. If you think of your income statement, your balance sheet, I'm going to make this really simple for everyone. The purpose of an expense is to create income one time, right? So you have a marketing expense, you put that marketing expense out, like you put in Facebook ads. The goal is to immediately generate revenue. That's the goal, right? So the purpose of an expense is to create income. Well, why do we buy assets though? The purpose of an asset is to create income over and over again. So an asset just is a longer term expense. Think of an asset as a long-term expense. That's what it is. If the purpose of an expense is to create income, and then an asset creates income over and over again, if we're constantly putting our money back into our business assets, our business as an asset, we're buying assets for our business to create that income over and over again. The government's just saying, look, if you're putting your money back into that productive use, you get a deduction. Everybody knows that if you put your money back in your business, that's a business deduction. You don't pay tax because we tax net income. We don't tax our gross receipts. That's called sales tax, not income tax. And so if we put it back in, we reinvest in our business, we're not going to pay tax. Well, but guess what? Down the road, we sell the business. Well, here's the great thing. But when you sell your business, you pay capital gains tax, not ordinary income tax. So by definition, you've cut your taxes in half by reinvesting into your business instead of taking that money out of your business and consuming it. So really, again, income is highly taxed and reinvestments are immediately not taxed, and in the long term, low or no tax.
Yeah, it's a dead simple framework for understanding how it plays out over a long time horizon. I wonder, I mean, that's a very principled approach. How much does the specifics of the advice change on a year-to-year basis? I'll give you, sort of a contemporaneous example. We're, coming up on the 2017 Tax Cuts and Jobs Act, right? That's largely sunsets in 2025. Does that mean there are things that people should be doing right now over the course of the next year and a half? Or is it something, I mean, obviously your approach here, it sort of works over the long haul, but then there are also these sort of more, legislative driven opportunities, I imagine, as well.
Oh, no question. You've got tactics within your strategy, right? So strategy is long-term, tactics are short-term. And for example, we have this huge estate tax exclusion, transfer tax exclusion, upwards of $26 million for a married couple. Well, that's ready to sunset, right, in a few years. So what you don't want is you don't want to be one of those, let's say it sunsets at, I think it sunsets at the end of 2026. Okay. So you don't want to be in October of 2026 trying to find an estate planning attorney who can actually deal with this so that you don't have a big estate tax when you die 2 years later, or if you were to die 2 years later. You want to take advantage of it now while the law is so good. That's one that absolutely everybody should be doing estate planning right now. Even if you don't have huge amounts of assets, do your estate planning, be ready for it. What might happen is we might get an extension. Great. If we get an extension, we're going to have that piece of paper that we're not going to sign. We're going to have that trust document we're not going to sign, but we're going to have it ready to sign. Okay. But let's say then it either does sunset, depends on of course, the administration, what's going to happen. And we think that it's really going to sunset, or the law actually changes in 2025, which chances are, whichever administration, whichever party wins in 2024, we're going to have major tax law changes in 2025 and 2026. There's no question about it. And so then we have to look at, okay, so what do I have to do now? But what you can't do is wait, because you're reliant on other people and you need time to do things. I find typically a good estate plan takes anywhere from 3 months to a year to put together. And so if you're starting this in October of 2026, I think you're in trouble. I actually think it easily could change in 2025. So if that's the case, do I really want to wait until 2024 even to get started? All my clients, we're working on it right now. So that's the type of thing. Or let's say that you've got something that's in the law, and you've got a few years to do. We've got solar panels. We've got the big solar tax credits and tax deductions. We've got bonus depreciation that's phasing out right now, right? We were at 100% in 2022. We're at 80% in 2023, 60% in 2024. Eventually it phases to zero, unless they, right, relieve that. But right now it's at 80%. Well, do you want an 80% deduction or a 60% deduction? So whether you do it now or next year is 80% versus 60%. But let's take an example of the solar panels. Okay, you want to put solar panels on your business, on your office building. Great idea. especially if you are in Arizona, it's 145 degrees like it is here. And it's sunshine for like 19 hours a day. If that's the case, then if you're actually, there's so much demand for solar panels that if you don't start right now, you're probably not going to get them there installed before the end of the year. So while you may get, so remember this also, people say, well, yeah, but there's the credit, you can get that credit even though they're not fully installed. Yes, but you don't get the deduction. So remember that for solar equipment, you get a credit, that 30% credit, but you also this year get up to a 65% deduction if you use it for business or investment property. So that means the government's basically paying 2/3 of your solar panels and your batteries. By the way, don't forget the batteries. Solar panels are pretty much worthless without batteries. That I've learned that the hard way because during COVID, my batteries went out and you couldn't replace them, and it just shot up. My utility bills just shot up. Fortunately, we got batteries now, so we're back in business. But those you're right. I mean, there are some tactical things that you really have to take advantage when they're there. But also we want to look at the long-term picture, because I'll give you an example. One of the things we talk a lot about right now is depreciation. We've got this bonus depreciation. I mentioned it on the solar. We've got it on real estate. So it's not always a good idea to take it. There are other cases where we talk about, like in real estate, we talk about these 1031 or like kind exchanges. There are times when you're better off not doing a like kind exchange. So really, a lot of it is make sure you're evaluating, not just today. I'm looking at a case right now where we're deciding, should we take this big depreciation deduction in 2022? We're actually still working on 2022 tax returns, or because we think we're going to sell in 2024, but is it actually going to work to our benefit to take it now versus take it over a longer period of time? We're actually running the numbers on that. One of the great things about having a CPA is that CPAs are really good at numbers. Okay, we're not really good conversationally, right? I mean, the reality is that an outgoing CPA, somebody who looks at your shoes when they're talking to you, that's kind of our internal definition there. But we're really good with numbers. So make sure you always run the numbers. I mean, that would be one piece of advice I would give every entrepreneur. You do it in your business before you take on a new project or an acquisition. Make sure you do it with your taxes as well.
Yeah, fabulous perspective and advice. One other question sort of related to recent news. There was a lot of discussion and ultimately it didn't pan out, but I don't think for lack of trying, and the idea I'm sure lives on, the idea of staffing up the IRS to the tune of 87,000 new agents, right? And so you talk about this idea that you can view the government as your partner. How do you think about the risks of your approach or these strategies, even if they're completely by the book, above board, to the letter, black and white law, when your partner is staffing up to the tune of 87,000 new friends that might come knocking on your door?
Yeah, so I want to be really clear. Congress is our friend. The IRS is not. Okay, so they're two very different branches of government. The law is our friend. The IRS isn't always our friend. That's actually why choosing your advisor is probably more important now than it's ever been. I keep running into CPAs who've never handled an IRS audit. I'm going, oh, well, good luck with that in a couple of years, when I think IRS audit's going to triple or quadruple within the next couple of years. I know they gave it a haircut, but they're still adding a ton of auditors. And remember also that a lot of managing an audit is managing the audit process and managing the auditor. I think IRS auditors actually have a very difficult job. Can you imagine being in a job where your best customers hated the sight of you? They really do have a tough job. And I find that most of them try very hard to do a good job. The challenge is that sometimes they run into things that are perfectly legal, and yet the IRS says we don't like them, and so we're going to challenge them. Well, that's where really having a good team in place is going to be more important than ever. Well, I'll give you an example. You might have a situation where you need a tax attorney. Well, where are you going to find that tax attorney? Probably from your tax advisor is the one who's going to refer you to the tax attorney, but they'd better know the good tax attorney. That's going to happen. I think we're going to see more and more court cases over the next few years. We've seen an uptick in the last few years, but I think it's even going to get more. The challenge is that the IRS, and when an auditor comes in, they have the heavy hammer, right? They are the 800-pound gorilla in the room. And so they can say, no, it's not deductible, even if the law says it is. So what we want to do is we want to make it, first of all, we want to make the auditor's job as easy as possible. I mean, we really do. My job is to help the auditor do their job so that they don't do more than their job. Okay, I don't need them to go overboard. I want them to do really what they're after, and let's limit it. Let's limit the scope of the activity to what they are really looking for, and let's take care of it. Let's help them get their job done. Let's not fight them. Let's say, look, we know you've got a tough job, and we're going to work with you, and we're going to get you what you need, and we're going to make it as simple as possible. But how you present that to the IRS is going to be very important. The other thing is how you prepare your tax return is going to be more important than ever, because we prepare every tax return. Now, our clients rarely get audited. We prepare every tax return as if it's going to get audited. So we want to have a very solid foundation there. So it gets audited. So what? We've got all the documentation behind it. We know what we're doing. We know what we're talking about. We didn't take any positions we can't sustain. Right. So it shouldn't be that hard. And I've handled over 40 years, you're going to handle a few IRS audits. And certainly there were times when we handled a lot of IRS audits, and that's all good. It's all good training. But remember, the most important thing for you is, and I will tell everybody, your number one job as the taxpayer is to never talk to the IRS. That's your number one job. Don't ever talk to the IRS. That is my job. That's not your job. And so if you've got a good advisor and they know how to work with the IRS, I think that you'll be able to sleep at night a lot easier.
Tom, kind of adding, to the conversation of picking the right team that we talked about earlier. I'm curious, for the entrepreneur out there who has left self-employed land, they're maybe moving into the business owner quadrant, they're moving through that, and now they're moving to investor. It seems like there's more and more complexity involved in all of those quadrants as you're moving through. I'm curious about team selection, because my experience as I've gone through those quadrants is, you have a financial guy who specializes in, 401ks, and then now you're in private equity. Well, I don't do that. You've got your CPA involved. You've got insurance. You've got, well, you need to go talk to your attorney about this. And then by the time you get the attorney, you forgot what the language was, and they ask a bunch of questions, and you start ping-ponging around. And I just think sometimes people get lost in the sauce. So what do you think? What's the right way to think about that and simplify all that?
Well, I have a few thoughts on that. Thanks for asking that, Stephen. First of all, there is this notion that every once in a while we have to upgrade, right? We need to upgrade who we're with. One of the advantages we found having a network is we can upgrade within the same network and with the same mentality. So we might have somebody who's outgrown their current member of the Wealth Building Network, and we just move them to another member in the network who can do those other things that they can do. Or let's say that you run into, we'll have somebody who has never done real estate before. Now they're getting real estate. Well, we want to make sure then they're with a CPA who understands real estate, or they're thinking of investing overseas. Well, we need to make sure that we get that help with investing overseas. So it's really it's really having a very broad network and not really relying on a single individual. And a lot of entrepreneurs rely on that single individual CPA, and that single individual CPA really has very little access to other resources. One of the things we actually do is we actually provide a national tax office for our members. So we have tax people at Wealthability that are there to help our members do the more complicated things and get them to the other members that need to be, need to be resources for them. So I do think that, you need to be able to have that network of people. This is one thing, I mean, Stephen, you and I've talked about this many times, having that network of people and, the who's that you go to, really, I mean, as you're going to grow, you're going to outgrow certain individuals. But I would say the other side of it, and that is that I think that the small entrepreneurs, like a small local restaurant, tend to provide the best service. And so what our goal with the Wealthability Network is, let's have entrepreneurs, but who have access to better systems, to a broad network, so that you really get the best of both worlds. So you get the advantages of the big firm, but not the disadvantages of the big firm, and the advantages of the small firm, but not the disadvantages of the small firm.
Do you have any telltale signs that maybe would be just a tap on the shoulder if an entrepreneur is noticing this, that, or the other, that maybe it's time that they evaluate upgrading?
Yeah. So for one thing, you're the one that, as the client, you're the one always asking the questions. The number one job of your advisor is to ask questions. Your job is to answer questions. It should not be your job to ask the questions.
So good. That's
number one. Number two is I'm going to give you an odd one. They always have an answer. A really good advisor knows what they know and knows what they don't know. Now, they'll always be able to they should be able to find an answer. But if you have somebody who kind of comes across like, well, this is the way this is, and there's no other alternatives. And, we call those know-it-alls, right? And there's a lot of them in every advisory industry. And I mean, if you run into an advisor says, gee, that's a really good question. I have no idea. Let me go figure that out. That's a good advisor. You want advisors who are students, that are constantly learning, that are constantly getting better. I asked a group not too long ago. I said, so how many of you, this was a group of entrepreneurs, I said, how many of you like to speak in public? And I was surprised, about 10% of the room raised their hands, which is way more than I expected. And I said, and of those of you who raised your hands, how many of you would like to get better? And not all of them raised their hands. And I'm just going, what? I've been speaking on stage for 40 years, and I am constantly looking for ways to get better. So I actually think that's a big, you can tell when people ask you good questions, and when they're constantly looking for new ways of doing things, they're constantly thinking, okay, how can I improve? To me, that's who I want to be around. So if that's who you want to be around, then find that person that is really a student and really understands that they don't know everything.
So good. Well said. And I definitely, coming from another sexy industry in my past, insurance, I know that the advisors that know everything are very, very scary to work with. One final question, Tom, just because I think this is unique to you. Ryan and I obviously do a lot of work with superpowers and helping entrepreneurs reach new levels of freedom and growth. That's why we do this podcast, The Next Level. You have a very special relationship with your assistant. And so I would love for you just to share that experience. You're not a superpowers client, anything like that, but I just would love for you to share that experience so entrepreneurs can hear and benefit from your wisdom.
Well, I appreciate that. So I'm a really big fan of personal assistants, executive assistants. It's probably been 20 years since I had my first assistant, and it was a part-time assistant. And that was great because they could do certain things. I mean, this was long before you guys came around. I would have loved to be able to just go to somebody like Superpowers and just say, here, take care of it. then I kept upgrading, just like we've been talking about. I'd upgrade from one assistant to the next assistant. What I finally got to is somebody who was a professional assistant. In other words, that was their, they say that I think it's the Happiness Advantage. I don't know if you remember that book. Great book. And in the Happiness Advantage, he says, you can look at your job three ways. It's a job, it's a career, or it's a calling. And for a personal assistant, to have one that it's a calling is life-changing, because she gets frustrated when she's not perfect. She gets frustrated when she's not, thinking about everything and she misses something. She gets really frustrated at that, because to her, it's a calling. And so much so that, my wife has been very clear that, if she goes, my wife goes, right? So my wife does not want to be my assistant ever. That is not her calling. So we're kind of joined at the hip there, so to speak. I just love my personal assistant. She takes so much off my plate and allows me to do things that I need, that I want to do. And I like the personal assistant. I mean, I know there's executive assistants and personal assistants. I like personal assistants because what she recognizes, my assistant recognizes, is that anything that she can take off my plate frees up my space so that I can be better at my work, right? Because as entrepreneurs, right, work is life, life is work. And because we're so committed, our business is our calling. And so for her, if she can get a contractor, to take care of an air conditioner that breaks down, right? That is freeing me up to do something else so that I don't have to spend my time dealing with an air conditioning contractor. And in Arizona, air conditioning, really big deal. So that's what I'm saying. I'm just, what you guys are doing at Superpowers is absolutely fantastic. I'm going to tell every entrepreneur out there, you don't have a personal assistant, an executive assistant, then you need to talk to these guys and get one, because it will change your life.
Super kind. And
go
ahead.
Thank you. Yeah, thank you for the experience share on that. I think it's so, I think it's one of the most important things is for folks to hear examples of how other entrepreneurs are getting so much leverage out of their personal assistant. And I think that gives them a lot of confidence to take the next step forward, because they intuitively understand the value of who, not how. They intuitively understand the importance of having the right people around them in the team. But that's a big step for a lot of folks. It's different than a sales hire, an operations hire, bringing on a CPA or financial advisor, right?
Yeah, for sure. It's just, like I said, it's a game changer. You get the right personal assistant, it's a game changer. It'll just make your life so much more pleasant, so much easier. It's like, people will ask, can we schedule a meeting? I'll say, yeah, so here's my assistant's contact information. And the reason I do that is because I will mess it up. I won't do a good job with it. I'll forget. I won't write it down right. I won't get all the information, and she will. And she is, and by the way, as you guys know, because I'm sure she followed up with you like 16 times, she will not let anything fall through the cracks either. And that's the one thing. As entrepreneurs, we have a tendency to let details fall through the cracks. And a personal assistant, really, when I was looking at a personal assistant, I'm going, okay, so I want somebody in a personal assistant who is a high fact finder and is a high follow through, because I want them to have those natural instincts and those skills that I don't have. I want always surround myself from people who can do things not 80% as well as I can, but 120% as well as I can.
Well said. Well said. Well, Tom, I did not expect a conversation about taxes to be so entertaining, so riveting, but that's exactly what it is. I really appreciate it. Some big takeaways that I noticed along the way. Taxes are likely your biggest expense in the business, and that makes the government effectively a partner in your business. The more income you earn, the more tax you pay. The more wealth you build, the less tax you pay. Your tax advisor is the most important person in your financial life. They'll have the biggest impact on your financial well-being of any advisor. And a network of who's can help you manage the phases of business and personal financial growth. And the number one role of your advisor is to ask you questions. Your job is to provide the answers to those questions. So thank you so much for joining us. How can our listeners learn more about you, about Wealthability? What's the next step for them?
So really simple, wealthability.com is the place to go. We'll actually do a free second opinion on your tax return. We'll look at your tax return and say, okay, looks great, or nope, there's a lot of things you could do here, and we're happy to do that. You can just do that at wealthability.com. Obviously, if you want some really good, solid background and educational background, go to Tax Free Wealth and the Win-Win Wealth Strategy, or join me for my podcast, The Wealthability Show.
Great podcast.
Awesome. And we'll provide links to all of those in the show notes. And thank you again, Tom. Really appreciate you joining us today on The Next Level.
Thanks, Tom.
Thank you, guys, and thanks for what you're doing.